November 2024 auction is a special auction. It has delivered 3 fixed coupon bonds with varying coupon rates and varying maturity dates for our bidding. The 3 bonds are FXD1 2024-10, which is giving us a coupon of 16%. We have an FXD1 2023-10, which is giving us a coupon of 14.151%. And the third is the fixed coupon bond, the FXD1 2022-15. This is giving us a coupon of 13.9420%. We consider this auction to be a special auction. As per our tabulation, there are several things that you need to look at to denote that the November 2024 auction might be the last auction you are getting returns or coupons that are higher than the normal. The normal coupon rates are usually between 10% to 12 or 13%. So these coupons, and considering numerous factors that we are going to highlight in this video, you will realize this could be the last best auction for you in 2024. And the first one that we need to look at is the amount that the government seeks to raise through these 3 bonds. And that is 45 billion. This is an amount that the government has been looking for or sourcing through issuance of a bond in a specific issue by issuing a single bond. And in many cases, or in extreme cases, they have issued 2 bonds but seeking varying amounts. This is a small amount for the government to be looking, or the central bank to be sourcing through issuance of 3 bonds. On top of that, we need to look at the other environment determined, because we consider this one to be a departure from borrowing from the local markets or domestic markets in favor of external borrowing. And that one is supported by the fact that the IMF has approved a loan of 78 billion to the government, and the government is close to sealing a deal of a loan of 195 billion from the external market at a lower interest rate of about 8%. If you compare that cost of financing to the government with the rates in the domestic markets, which have gone high of 18%, it favors borrowing from the external market. That is also compounded by the fact that in the recent past, one of the instruments that had delayed approvals of external loans by the IMF, one was the rejected finance bill, which is now being reintroduced into Parliament for approval, and considering the political climate that has calmed down, and it's foreseen that that bill will go through, to have brought down the need for a lot of issuance of our bonds for borrowing in the domestic market in favor of directly getting revenue for the government through taxation. That should also be viewed in favor of the several tax measures that were litigated, and in the recent past, or in a few days ago, those litigations have been decreed in favor of government. And one such is the housing levy, and we also have the 2023 Finance Act, which has been declared constitutional. That follows narrowly before the reintroduction of the Finance Bill 2024. So all that is done to bring more revenue to the government and reduce the need for domestic borrowing or borrowing in general. And therefore, with the observable decline, swift decline of the inflation rate, which now stands at 2.7% from a high of 4.8% in the same year. This low rate or inflation of 2.7 was last observed in the last 15 years. And therefore, this will continue pushing down the interest rates, and also, as observed, the interest rates in the treasury bill market will keep on coming down. Those rates are benchmark rates for most of our investment vehicles, including the favored money market funds and other collective investment schemes. They benchmark their returns on the return of the treasury bills, which are still coming down. And as such, as at now, the 91-day treasury bill has clocked at 13.9656%, the 182-day treasury bill giving us a 14.5232%, the 364-day treasury bill, the longest bill, has given us 14.9684. This is to consider that the returns or the market interest rates have now come down below 15%. It is important to note that these three bonds on issue, the one giving you the highest coupon, that is the FXD1 2024-10, its auction closes or its value date is way beyond the value date of the other two bonds. As we observe as a channel, these bonds will likely be issued at a premium. Premium because now that the interest rates for the 364-day treasury bill, which is the market interest rate, are shot down below 15%, and the coupon rate for this bond is above the prevailing market interest rate of 15%, then it means that this bond will be issued at a premium. We will be paying a price that is above the par value of 100 shillings. The second bond, that is FXD1 2023-10, is giving us a 14.151%. That is slightly lower than what we are getting from the market or the market interest rate of 14.9684. That narrow margin might be closed in the next treasury bill auction. But needless to say, the small margin will give us a small discount on the issue of this bond. But the FXD1 2023-10 and the FXD1 2022-15, being bonds that are going to be auctioned, their value dates are on 11th November. By that time, we do not foresee a lot of changes in terms of the market interest rates, and therefore we expect these two bonds will attract a discount. They will attract a price that is lower or below the 100 shillings per value. When looking at the accrued interest on the three bonds, where the FXD1 2024-10 has an accrued interest of 2.4615, the FXD1 2023-10 has an accrued interest of 3.5348, and the FXD1 2022-15 has an accrued interest of 0.8043. That means at the end of the day, for the two bills, that is the FXD1 2023-10 and FXD1 2024-10, price that we will pay or the amount to pay for towards these bonds shall be above the 100 because of the accrued interest, except the FXD1 2024-10 that will obviously be issued at a premium because the market interest rate will have shot down below the coupon rate of the bond. These three bonds have given us an array of months, the coupon payment months, that will be very suitable for those who are looking for instruments for laddering purpose. Because if you look at the most of the bonds that were reissued, the reopened bonds, majority of them were paying their coupons in March and September. Those who are laddering, they will note that we did not have March, or we didn't have a bond that paid out its coupons in April and October. And therefore, the FXD1 2022-15 becomes a very good bond for those who are laddering. Remember, at most cases, we do say that it's not the coupon rate that attracts the investor. We have varying needs and varying objectives. And to put this one in a good example is that if I'm investing 100,000, I may be looking for a high return based on the amount that I want to receive at the end of the day, or the income that I want to receive from that investment. So I might be moved to the 16% bond. But if I'm investing 1,000,000, for I might not be ruled by the 16%. I may consider the coupon payment months that have a shortfall in my laddering schedule. Because the higher the capital that you are investing, the lower the interest that you might be going for in terms of the revenue or the incomes that you are looking for. Those who are looking for laddering or layering of their bonds for a regular monthly income, these three bonds are giving us a good opportunity, considering that most of the reopened bonds in year 2024 were paying their coupons in March and September. To be precise, we did not have a bond that paid its coupons in April and October. And therefore, for those who are looking to ladder, those are two open months that they may consider going for the FXD1 2022-15 for purposes of filling in the gaps, the two gaps, that is the month of April and October. For those who are looking for a short-term or medium-term investment in terms of duration for which their money shall be held in this investment, they might be pushed to look for the FXD1 2023-10 because it gives us the shortest investment period of 8.3 years. Those who are looking for the highest coupon, they will go for the FXD1 2024-10 because it's giving us a 16%. Those are three different objectives or goals for different investors. And that is the reason we are saying that these three bonds are giving us an opportunity that satisfies different investors. We shall be looking at the specific important dates with respect to the FXD1 2022-15 in 3 seconds break because we have already covered the FXD1 2024-10 and the FXD1 2023-10 in our previous videos. We shall have the links to those videos in our description for this particular one. So see you after 3 seconds break. Welcome back and thank you for that subscription, your like and share. For the FXD1 2022-15, these are the important dates that you need to watch. And the first one is the selling period. This is the period within which you are allowed to create your DAO-USD account if you do not have one. Get yourself acquainted with the TMD or the Treasury Mobile Direct if you are outside the country. Create your account and place your bid. And that stems from 25th of October up to 6th of November. Then once that period expires on 6th, we have important date that we call the bid closure date. The bid closure is very important because that period does not exhaust the day of 6th. The last day of the selling period is also comes as the bid closure date and the auction date. Those two events share that day. So as a bid closure, you are supposed to have placed your bid on or before 10 a.m. of 6th November. Any bid placed after 10 a.m. will not be accepted or will be closed out of the system. Immediately after the closure, that is 10 a.m., that is when the auction starts and concludes by afternoon of that particular day. And therefore, the same day that was at the bid closure day and the auction date also gives us the result date. So those 3 dates fall in one day. The bids close at 10 a.m. Then the auction takes place on the same day and the results get relayed in the afternoon. And therefore on 6th November, you will also receive results of your bid, whether the bid is successful or the bid has been rejected. We foresee a lot of rejection of bids in these particular auctions because it is a deliberate action by the government, the central bank, to keep on check of the inflation rate and the market interest rates. So we foresee a lot of competitive bids being rejected in order to maintain the prevailing market interest rates and the inflations. Once you have bid and you have gotten your result, on Friday of 8th November, that is when you are going to get your payment details. And the specific one is the 8 alphanumeric number that you're supposed to obtain from your transaction tab in the your USD account. That number and your USD account number, together with the amount that was communicated to you through the successful message, those are the details that you require in order to RTGS the payment to central bank. There are only two ways that you can place your bids, and the two are electronic means. We no longer place manual bids with the central bank. You either have a USD account or you use the Treasury Mobile Direct, where the Treasury Mobile Direct is most suitable for those who are outside the country or diaspora investors, those who do not have local bank accounts, because that is the one that is limiting most of them from creating their USD accounts. You must have an active local bank account. If you do not have that one, you are supposed to use the Treasury Mobile Direct. Once you have received your payment details on Friday of 8th, you will have that Friday up to Monday. That is the payment period to have cleared your payment. Because on Monday is the value date and is also the last day to place the payments when your details or your USD account, your investment will have been uploaded and updated your investment account. Then immediately once that is done, all those bonds will be offloaded to the secondary market for purposes of trading. A very important question that many people do ask is the question of liquidation. Suppose you have purchased or invested in these fixed coupon bonds and you want to liquidate them. You want to sell your bonds because maybe you have a pressing need that you want to address using the money that or the redeemed value. It is important to note that fixed coupon bonds are not redeemable by central bank, partially as it is the case with infrastructure bonds. It's important to know that you should invest in the fixed coupon bonds that you are willing to hold to term. But if events happen that require you to liquidate, the central bank is your liquidator or purchaser of your bond, but as a last resort. Because what central bank does, it rediscounts your bond. Rediscounting is a financing option whereby an instrument of payment that is supposed to be realized on a future date is accepted or exchanged at an interest or at a fee. And therefore, the central bank will charge you a 3% on and above the prevailing market yield or coupon of that bond, whichever is higher. It is a bit a challenge to sell an individual bond in the secondary market because we consider that one as an odd sell. Most of the traders in the secondary market, they are mainly insurance companies, retirement funds. We have fund managers of various collective investment schemes, and these individuals or these fund managers trend in hundreds of millions, if not billions. So a single sell becomes a difficult transaction to realize in the secondary market. But you have the option of using your broker. A broker will give you a easier route in liquidating your bond. But if you are not able to get a buyer for that bond, then you resort to the central bank as a buyer of last resort. If you are new to the channel, we request you to give you a subscription and hit the notification button if you have not done so, because every other time we will be uploading a video, YouTube will be notifying you of that particular video. Thank you for watching.